I'm Jeff Saylor, and welcome to this edition of Financial Reporting Considerations, a series designed to keep you up to date with current events in accounting reporting. In this edition, we'll look at the impact of the COVID-19 virus on your consideration of accounting estimates. Many, if not most, numbers found in financial statements are estimates rather than hard numbers. Did you ever think about that? Well, for this reason, management must use various methods and make judgments to make decisions on how to provide consistent, reasonable estimates. The impact of the coronavirus may have an effect on making those estimates. Now, here's some common examples of accounting estimates we deal with. Financial asset market value decline, inventory allowances, your allowance for doubtful accounts, your impairment of property, plant, and equipment, impairment of intangibles, deferred taxes. Probably didn't think about that one, did you? Loss contingencies, revenue recognition for contracts from customers, and lease modifications. I'm sure there's a myriad of others, but that got me a pretty good list to get us started. Now, here's your considerations. Are the decisions and judgments reasonable? Now, of course, we look at that two ways. Management has to make that call, and then you, if you're an outside practitioner, have to make that call as well. Second thing, do you have enough information? And that might be a scary thing right now. Remember, this is not a disclosure issue, but a recognition and measurement issue. You're trying to determine the proper amount put on the financial statements. Let's look at your allowance for doubtful accounts for receivables. Question you ask is, are my customers affected by this virus? And as a result, will they perhaps pay at a slower rate because of this? Worse yet, could they default? And so you weigh out that information and you make the judgment call to say, is a higher allowance appropriate in this situation? Now, what that would do would be to affect your net income for 2019. Why? Because you have had to bump up the allowance in that year. And so we'll see a decline in income, even though that event occurred in 2020. Let's look at inventory allowances. Is your inventory highly subject to obsolescence? Will demand decline? Meaning that stuff's going to sit on the shelves. Are there alternative markets to move it? Let's totally shift gears here and look at deferred taxes. Okay, you're expecting a loss for 2020 as a result of the virus. We're going to make that assumption. And the nature of your deferred tax assets, that is the ones that will give you a deduction in the future, require income for the utilization, now don't they? Now, depending on the nature and time limits on those assets, you may have to set up an allowance to reduce the value of those deferred tax assets. These are the kind of things you want to be thinking about on the estimate front. I certainly hope you found this information helpful and that you, your family, and friends stay healthy and happy in these difficult times. Thanks for watching.